Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Kickstart video where I take a look at three of the major currency pairs from a technical perspective. The Euro versus US dollar, the dollar versus yen, and sterling versus US dollar. So let's get started. Yesterday we had a very narrow trading range in the Euro versus US dollar, only 32 pips. Today we did extend above the high from yesterday, which took the price above this low right here and this high right here and highs right through here. But we fell short of the green line. That's a 200 bar moving average on the 4-hour chart, and rotated back to the downside. The last few bars have seen the price move back below this swing area through here, where we had a number of different swing lows and swing highs going back all the way back to the middle of November. So getting below that level was somewhat positive, and we also extended the range from yesterday's trade on the downside. So extension on the upside, extension on the downside. So things are looking better, at least from that perspective. However, we did fall short of the next target out here at the 200-day moving average. Nevertheless, the sellers are more in control with the price below this swing area between 1.0878 and 1.0894. Stay below that level, I think, tilts a bias more in the downward direction, and would have traders again looking for the 200-day moving average. That's a green line in this chart. Last week's trading, we came down to that level and broke below it by about 4 pips here, and then came down to the level and found support buyers here. Getting below that level and staying below that level is needed to increase the bearish bias, with the 50% retracement of the move up from the November low to the December high as the next target on the downside on a break of the 200-day moving average. Let's take a look at the dollar versus yen next. Overnight, the Bank of Japan kept rates as is, and talked a little bit about potentially inflation moving up back toward that 2% level, which would allow them to get off of their low policy. Perhaps the wage negotiations are going to play a big role in that going forward, and there's still uncertainty in regard to that. So what we did see for the price action is at least before the report, I think it was before, the price did move higher, and we went up to test this swing area through here, where we had a number of different swing highs and swing lows going back in time, and the price went right up to that area and found willing sellers against the level, and fell off. The interest rate decision sent the price even further to the downside, the yen to the upside, dollar lower, but they break below the 100-day moving average. That's the blue line in this chart, and back below the 61.8% retracement on the move down from this high right here, which is in November high, to the December low. Should have kept the price action, or shifted the bias more to the downside, but it didn't. It didn't last, and the price rebounded back to the upside. As you can see, we're back above the 100-day moving average, back above the 61.8% retracement, and back below this swing area through here. So the battle goes on between the support here and the resistance up here, and we'll see how that is resolved going forward. That support comes down to 147.45, the resistance at 148.59. So it's about 115 pips or so, or 14 pips between the support and resistance, and we're sitting right basically in the middle a little bit, maybe to the upside, a little upside bias there. So we'll see how we'll see what the traders decide. Let's just take a look at the hourly chart for giggles, and see if anything came into play there. And you can see that the move to the downside that we saw here did find support buyers against its 200-hour moving average, green line here, similar to what the dip right through here, where we found early buyers against the level before moving to the upside. And here we get the bounce back up. We are testing the 100-hour moving average at 148.03. So keep that level in mind. If we get and show more momentum above that, and we are above it at 148.08. So the buyers are making a play here. We'll see if they can extend up to that swing area where we saw the resistance sellers come in today between 148.45 and 148.59. So buyers are more in control in the shorter term. Let's take a look at the sterling versus US dollar next. And here we'll start on, or we'll focus on the hourly chart. Why? Because, well, it's been ups and downs through this time period through here. In trading last week, we thought we had a break to the downside. We did briefly, but that was quickly reversed, and the price started to rotate to the upside. Admittedly, the price action to that upside has been up and down, 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 including today's trading, where we saw the price extend to a new high going back to this day right here, which is I guess sometime last week, 1, 2, 1, 2, 3, 4, 5, maybe Monday's trade, and found willing seller or sellers above, on that move, and we broke above the trend line, but failed and started to come back down. We are now testing the 100-hour moving average. That's the blue line in this chart, and the 200-hour moving average, for that matter. These two moving averages, and the 38.2% retracement and move up from this low right here to this high. So there is a cluster of support where we're being tested right now between 1.26969 and 1.2704. And matter of fact, we're just below that level at 1.2996 right now. So if we can gather momentum to the downside, we'll look toward the low price from yesterday's trade as the next target, and then we'll look toward the 50% midpoint of that same move up from this low right here to this high right here. And if we get below that level, it opens the door for further downside momentum. Note that in Friday's trade, we came down toward that 50% retracement and did find support buyers, but on Thursday and Wednesday here, the price did break below that level and stay below that level, at least for a little bit, not really that much, but in fact, it bounced back and forth rather quickly. But the getting below 50% retracement is needed to increase the bearish bias. So there you have it, a look at three of the major currency pairs from a technical perspective to kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.